Hello and welcome to another episode of Casual Friday, brought to you by our friends over at the FTX app. I'm here, Don is here, and lots of red candles on the weekly time frame are here as well. I've got lots of topics to cover. Maybe first, actually, we'll go through kind of your trade and the market in general, because it's been a very weird week of following the replies that you've been getting, right? Because there's a
Mm-hmm.
kind of master thread, as in one that has the macro thoughts, and that one was quite clear, right? Where it was bearish when the 60k failed, breakout failed, and I think even at 58 or 60, you were calling for like, the other side of the range, 30k,
Mm-hmm.
which
Yeah.
seemed unfathomable at the time, and understandably so, right? Because it's a 50% haircut in Bitcoin, then altcoins would usually go down like way more than that. I can understand the reluctance to kind of subscribe to that, but obviously it played out, right? And so it
Mm-hmm.
gets to 30k, you're at the beach, all this kind of UST blows up, Luna blows up, market shits itself, S&P looks like crap, people are selling Tether, you come home essentially, scoop some up at what, 20, 29 something, I think
Yeah,
is
28,
28.
8. Yeah.
28.8, 29 flat, roughly as an entry. And then for the rest of the week, you've been um, fighting off trolls, essentially, right? And like
Yeah.
you even put up like a sentiment poll asking where do you think this goes next, or where would you buy back type of thing with some levels, right? It was like 30 something, or if this goes up, where do you buy back in was basically the premise of the poll. And most of the responses weren't in the poll itself, but were in the comments saying it 18k, 14k, 10k, $100, zero, whatever.
Yeah.
So that's weird, right? That's not normal. Could you kind of run, for those unaware or those not following, could you maybe take us through your trade logic, your management, any conflicting signals you've had, what you think of it right now, given it's hovering at, well, what, 28.8 at the time
Yeah.
of recording? So, yeah, give us a state of the union type of thing.
Okay. Yeah. I mean, generally
And you can, oh,
speaking,
sorry, you can screen share if you want as well. Just
okay. Yeah, I can screen share. This actually makes it easier. Um, but yeah, let me see if this works.
yeah.
It should, I think. Perfect. So in general, like the trade idea is the same that I've had like a couple times now, where it's like this has been the macro range, right? Like you talked about this entire thing, like 60k to 30k, that's the macro range that we've been trading in. Now we're trading obviously below it, right? With 10 days to go towards the monthly close. And my idea was basically, I mean, I wouldn't have done this if sentiment wasn't as bad as it is, but I'll talk about that in a second. But my idea was basically I'm gonna try to buy as low below the range as I can, and then hope this entire thing snaps back towards the monthly close, which makes everything below the range a really attractive buy, right? So like what you want to have basically is that the monthly close is above the range boundary, which oftentimes happens, right? When you have like a range and you go like to like the extremes, at some point an extreme fails, but oftentimes it actually like comes back up before the close to just range some more, right? And this is like a macro range, so that seems like people have like troubles kind of envisioning bigger moves on micro ranges, but it's basically the same thing as like a smaller range, right? It's just the moves are bigger. And my trade idea was I'm gonna buy as low below the range as I can with like a lower time frame setup, and then hope that the higher time frames just align back bullishly. Um, Obviously we have like 12 days to go, like 11 days in a couple hours. That's going to be pretty tight given the recent price action, the one that we had like today and yesterday. I hope for like that would move a little bit quicker, especially given the sentiment, which as you described is hilariously bad. I cannot remember uh, sentiment actually having been this bad before. I've back in 2018, right during the bear market, I was like known as like the bear market trader. That's basically where my entire Twitter account comes from. Like the popularity of it was basically me just shorting 2018 and then buying back when sentiment got really, really bad, right? So I was like shorting, and then the moment I saw sentiment like we have right now, I flipped my position, longed a little bit, and then looked for the next short again. And that's still to this day like one of my favorite ways to trade. It's just sometimes you can't do it. For example, like when prices go up, right? You don't want to be the guy that trades sentiment. and counter trades like the bullishness, because the more prices go up, the more bullish people are going to become, right? But there's no like too bullish sentiment, because if sentiment gets really bullish, you just go and explode in the media and you get a bunch of new people come in, and like it's like I don't really subscribe to the fact that you would want to counter trend bullish sentiment. It just doesn't really make much sense, unless you have like a news event or something, where you see that the market should be strong but it isn't, right? We've had that a couple times over the years, where at like peak euphoria, so like you had really bullish sentiment, but that's not enough, so you have that, and then you get like a bullish event that gets faded basically, so everyone expects price to go up because you get like whatever, it could be like an ETF or could be like anything really that should be bullish and isn't, and then it just doesn't do anything and goes down. And that's where you can counter trend the sentiment, the bullish one. But in general, like you want to be counter trending bearish sentiment more than anything. And that's basically like where most of my bullishness comes from. It's just people just going completely nuts over Bitcoin going to like below 10K
Yeah, when
even,
you say
right? I've seen,
sentiment, is that just like a? Could you define that? Is it is purely subjective determination based on Twitter? Is it data driven? Otherwise, is the kind of funding and other mechanisms that express positioning play into it? What's your actual
yes.
data set or
Oh yeah, all of
methodology?
it. Pretty much exactly what you mentioned, like all of it. Like you look at funding, you look at all that kind of stuff, but you also look at, okay, how is social media going? And I can see that really clearly just because I have a Twitter profile. It's easy to just like fire out like a bullish tweet, see what happens. And if like 90% of the comments just bash you for it, you're like, holy shit, this is actually pretty bad. Because usually people are more than happy to be bullish, right? You give them an excuse to be bullish, they're more than happy to, and they kind of cheer you on. And then when sentiment starts flipping, it's like some people are going to call you an idiot. Some people are going to be like, yeah, this is nice. And then when it gets really bad, it's just basically your entire comment section shit talking you for buying support, essentially. Which, I mean, to be fair, and this is something that I think is important to mention, um, I think this could be one of the situations, and we too talked about this quite a bit, where it could actually play out that like the bearish sentiment people are actually right. They get kind of rescued because the macro situation of like the S&P and the Nasdaq and in general like the world that we live in is kind of rough, right? We have like a bunch of stuff to deal with, be it COVID, be it like supply chain issues, like everything
Monkeypox,
is
the new FUD just dropped.
yeah, I mean that's basically like part of today's move as well, where like people are just like they're looking for an excuse to sell, obviously. And then you also have the inflation fears, right? And rate hikes and all that kind of stuff, which could make it into one of these times where the dumb majority, I would call it, is actually right, being bearish at support. It's just I'm willing to take one loss to kind of concede that and say, okay, it's just like a freak accident, basically. Um,
I love it
to
when
be
you're wrong
positioned.
once. It's like, yeah, it's a freak accident, never before, once in a lifetime. The market is wrong, generational error. That's I
um,
know that's not what you meant, but it's quite funny. As far
yeah.
as common critiques or maybe even questions about like entering here, I think we covered it to
Hmm.
some extent on Technical Roundup. But like a common, a reasonable query would be, if you want to buy this monthly support, why don't you wait until it closes above monthly support and then you actually have like a clearer idea of where you're wrong, and you have more evidence of the position being right, or like a weekly close back into the range, or some sort of reclaim, or something which isn't just a breakdown. Because that's the point, right? Like if you're wrong,
Yeah.
this is the breakdown essentially, right? And you
Yeah.
long the breakdown, and you get number go down if it's a real expansion and prices are accepted below the range boundary. So then the question becomes, well, why don't you wait for more evidence, type of thing? Which is a fair enough question. I know what your answer is going to be, but I still think it's a reasonable line of inquiry.
Yeah, I think it is a fair question. The problem is, if we actually close above the support, right? Where do we close, right? We could close just at the boundary at like 37. We could close at 38, at 40. I just like drew in like a risk reward kind of setup. Like let's say you buy immediately, because that would look incredibly bullish, right? It would kind of like if we closed above the range boundary, it would kind of look like it did after the COVID crash, right? Where we immediately went up and then never went back, right? Never got like a retest entry or anything. It's just straight up. So to kind of avoid not having a position, you would have to buy the close if it's bullish, right? So let's say that's at 40K, and your target, and my target is for this trade. And I mean, people are calling it stupid, whatever. I don't really care. It's like a range trade. It's just like a simple setup. It's the range high, right? Which is like around 58K. So in this case, where's your stop loss? I mean, you could argue it has to be the low, right? So it's like quite far away, and your target is not that far away in comparison. So like the risk reward gets like much worse. And I think in general, um, I'm not entirely sure if I would even get a position, a proper one. Like it starts getting really difficult to buy when when everything is confirmed, right? You pay a price for that, and the more nimble you are as a market participant, the easier it is for you to kind of dodge that price. But I mean, if you're buying $100 of Bitcoin, you can buy that into strength whenever you want to, right? If you're buying 10,000 and it's like super strong, you're probably still not gonna slip much, right? But the bigger the number you buy in with, the more difficult it gets to just get the price that you want to, and then you just pay like 1% or 2 on top of what you're already paying, and it's just a massive headache. And in general, I think when it's this extreme, right, in my experience anyway, that people are selling Tether, and this happened around like 27.6K, like somewhere around here. I've always had like good experiences with buying that. And this time around, like I was sitting at the beach, like you said, I was looking at the prices, and I was looking at the Tether situation. And I was like, this is probably a bottom. And I was like really coping that I wasn't getting an entry, because this would still be like an amazing entry. And I obviously wish I was home at that point, but I wasn't. So I just had to wait for the next best thing. And I still think like if we go back down there, it's probably going to be a really nice entry short term. I think that's where people are going to step in to buy bigger, even if the traditional markets go down, which
that
has
was
been
going to
the
be my
case.
next question, right? As far as reasonable lines of skepticism or inquiry, it's like, okay, well, you don't want to wait for the reclaim because sizing into momentum continuation trade becomes difficult, and the risk reward is significantly worse at that point, and the
Yeah.
close might be most of the trade, right?
Yeah.
So that's all fair enough. And we wrote as much in Technical Roundup, right? You're usually like slightly more proactive with your personal account, and the newsletters, the kind of slow moving boomer type of approach. As far as the traditional markets, equities, correlation stuff, what do you think of that retort? Or also, this is just like an intellectual exercise. If someone comes to you and starts giving you like counter arguments for your position and stuff, I mean, you normally shouldn't fucking listen to them unless they know the full nuances and intricacies of your trading system and your reasoning and so on. Like, it's nice to
Yeah.
bounce ideas of people and kind of see what's up, but unless they've got like a pretty clear understanding of how your system works in general, and assuming you know what you're doing and you have an edge, you should just like execute the system that has an edge, and you don't have to prove anything to anyone, type of thing, right?
Yeah.
But as far as the big stuff, and big narratives that are driving prices lower, is this a form of decoupling trade, or is this, how do you reconcile something that's, correlations have been trending up, equities still look shit. This might be a breakdown, might be not, kind of depending on how the higher time frames close, right? But some will see this as a kind of, and you even tweeted kind of tongue in cheek, obviously, saying equities down, Bitcoin up. Who could have seen this, etc. Is there an element of decoupling or relative strength or any of that type of language in this trade idea, or is it just like a relax, guys? I just think we revert before we go to Goblin Town.
I think it's like a little bit of both. So I think we can decouple for a little bit. Like the Bitcoin trade, like we are obviously pretty coupled to the traditional markets, right? But there's many days in crypto history where Bitcoin just jumps 20% all of a sudden, and everyone's like, how did this happen? And it's usually because like correlation breaks, or you get like good news, whatever. Like these kind of like bigger jumps occur, and then people are like, oh, the correlation is done for, now we go up, now we do this, blah blah blah, and then it starts like crawling back to correlation, right, where it's like it's just a temporary jump out of it to kind of wreck everyone, like to kind of like just get everyone that's offside just because of the correlation. because it's not like Bitcoin has to go down while the traditional markets go down. It's not like there's like a mechanism that makes it so. It's just basically people trading that way because that's been making money, right? So that can kind of turn around just as quickly as it came into place by just but just like temporary. I don't think it's like in general we're just decorrelating and forever like doing something else. I don't think that's where we're going. Just macro wise, I think correlation is gonna be quite high up. But I think there can be like an easy trade where it's just people that are trading the correlation just get fucked over, which isn't my main kind of reason for the trade. Because I think the S&P just could easily bounce as well. It's not like this is a down only market, right? You look at the S&P and people just kind of like every time it dips, they forget that this has been like obviously an uptrending market for pretty much forever.
Until
And
now.
people are like calling doom and gloom now, which, like I said, I totally get where they're coming from, just based on all the headlines and just the situation that we're in. But I think the S&P can easily bounce quite a bit without reversing course, even if you're like in team bear. And I think Bitcoin can do the same. I don't think the bear market is going to be over if we bounce from here. Even if we close back in the range, I don't think the bear market has to be over. I could easily see that like be a bounce before we actually break down again, or before we just range forever.
Kind of a 6K Remembrance Act. We
Yeah,
had
exactly.
like 40, 60% bounces or whatever it was.
Yeah.
Just to round up on this trade before we move on to other topics, what does invalidation look like? And then on the other side of the trade, if it starts printing, I know you very rarely hold, for better or for worse, obviously, you can be the judge of that. You very rarely hold to your full target, and you'll kind of manage and observe and scale and do whatever. If it goes down, what does you being wrong look like? Is it just the market disappearing? And then if it goes up, where's the first area where you're like, I might trim some or move stops up or reconsider some trade parameters? Because I know you're not a set and forget type of guy.
Yeah, so like there's a very, very high chance I don't take it to range high, even if that's my original target. It's just not how I operate, and people tend to make fun of me for it. I still remember buying when we hit 30K, and then we bounced, and I sold just like a few percent up, like 30 to 40K. I think I
Took
took,
that
and then it
same
went.
trade together, basically, right? Like I had a better entry and sold earlier, and you had a worse entry and still sold later, and both of us kind of ate shit ultimately just because of how early we closed those positions. That was a good time.
And I do this all the time, where like a couple times, even in this kind of chop, I open and close positions, and people ultimately made fun of me. And now we're trading lower, right? We're trading lower as I closed any of these kind of trades. And what I did during this range is basically I realized a bunch of profits, even though we were going sideways, which makes me more. I mean, obviously shouldn't really impact too much, but makes me more comfortable just buying it again.
Yeah, I mean
It's
that's
basically,
legit. Like narratively, people are going to be really concerned, but it's like if you more or less sold 60 and you're giving it a stab under 30, it's like you're not going to have a bad time if you're wrong. You know,
yeah.
that's quite
It's
different
not
from
like
someone
I'm
who's been
going
like
broke.
DCAing the whole way down, and then this is like the last hurrah, do or die with final funds. It's like this is basically half the price at which you sold, and you're giving it a stab. It's not as dramatic as some of the comments on Twitter seem to have been insinuating.
Yeah, exactly. And it's kind of weird to see, really, because at the end of the day, and this is why like sentiment is so interesting when it's bearish in crypto, because we're all in crypto because we like something about it, right? We want to be bullish this thing. If you're a bear that comes into crypto that just wants to short it, I can guarantee you like all of your idols got liquidated a bunch of times before starting like a pay group or something, to kind of make their money back. That's kind of like the bearish playbook,
Ours is
right?
next. Just stay tuned.
Yeah,
After
maybe
this
we turn
trade
it around.
specifically.
Exactly. Maybe we turn it around, and it's actually, and we actually do it with like a bullish one. No, but for real, like this is kind of how it works, right? Like the popular bears, bear tart the entire way up, and then price goes down 50%, and then they say I called it, even though price is up like 5x from where they started being bearish. And then people are like, holy shit, these guys are geniuses, and then they join the paid groups, and then the next leg comes, because the next crypto leg always comes, and the entire group gets liquidated, and then people freak out and are like, how did this happen? Like that's just how this shit works. Like if you're long-term bearish and you just only like to trade the bearish side of things, you're just gonna end up broke. That's like, you're in the wrong kind of market, in my opinion. And in general, like if you're like, the bearish traders have to be really, really good. And I don't think the majority of people are good
Their
at
timing has to
trading.
be phenomenal as well, right? Which is the
Yes.
hardest part of it all.
And I'm not saying there's no phenomenal bears, right? There's a handful, but it's very, very rare that people actually have success being bearish for like a couple of years back to back to back.
Yeah. We managed to
Yeah.
not answer either of the questions as to.
Oh yes, sorry. Like I sometimes get carried away.
No, it's
So
fine. I know exactly what you mean. As the
can you?
comments told me, the comments last week they were like, "Don should talk more. Cred's too like negative, or he's less chill." It's like, listen, can't have
What?
two chill guys in one stream. It's very unreasonable.
No, I mean I feel like I talk a lot, but yeah, can you repeat the question?
Yeah, it's like, what does it look like if you're wrong? Where do you
Oh
manage
yeah.
if you're right?
Oh
Essentially.
yeah, okay. Sorry, it completely went on a tangent. But what does it look like when I'm wrong, right? So for one, pretty easy, monthly close below the range. Any close below 35K would start looking really shit, in my opinion, because at that point you have like a valid range breakdown. And then even if you have like a nice bounce, you still have that massive resistance to deal with. And at that point, I'd probably de-risk, even though there's a chance that it just like fake out and it goes back up. And at that point, I would have to be the guy that waits for confirmation, and that's fine by me. I could see that be like a fake breakdown, but I wouldn't gamble at that point.
It's like a different
It's
trade
just,
at that point, right?
yeah. At that point, it's just like hoping that it works. Like right now, it's basically there is opportunity there. If we have like some bullish momentum, if like some of the bigger crypto guys want to fuck over correlation traders, at least for a little while, they can. Like the setups there, I'm like very, very certain that if we close back in the range, you'd get a bunch liquidity to sell into if you wanted to, right? If you can make that happen. And I mean, I can't. I'm too poor for that, to push it all the way up to 37 for the monthly close. But if you could make that happen, I'm pretty sure you could actually get pretty much the entire liquidity that you spent, or like all the money that you spent, just back out into new willing buyers above the range. Which, I mean, it's just a setup, right? It doesn't have like, no one has to take it, no one has to push it that far, and maybe people just don't have the money for it anymore. But that's like a pretty neat setup, which I don't mind like taking advantage of. Now, if it doesn't play out and we close below, at that point, you have like a much tougher resistance to get through, which it's just not like, that's not the same trade idea anymore. It's not worth it. That's like the easiest one. And then on the lower time frames, I'm obviously still watching everything. I'm watching the weekly time frame right now, where I'm like, this is like not necessarily the weekly close that I want. We just have 2 more days to go. But basically, after a candle like this, where you have like a massive wick to the downside and a tiny candle up there, that
The lollipop.
almost, yeah, it does. But that almost looks like it wanted to get back into support, right? But didn't quite manage to. You obviously don't want to at that point get bearish momentum to the downside, right? Because that just means like this was a failed attempt to kind of make it look bullish.
Do you think you'll manage on the weekly, or will you wait for monthly, or does it just
I'd
depend on
probably,
momentum?
yeah. I mean, for me, I'd probably wait for the monthly, but it depends on
Yeah.
momentum, and it depends on how the stock markets go. I think there's very little chance that crypto on its own breaks down. It has to kind of be coupled with traditional markets going down, which makes this much more difficult than the usual kind of trade, because you kind of like, I like to say, like, you have to think in another dimension, because you have to kind of understand how crypto works and like how people are positioned, and everything that you would normally do for like a crypto trade. But then you also have to understand how the macro situation works, how people are positioned, and what kind of emotions are in that market, because they're different, right? And all of that just makes it basically more than double as complicated. That said, if you just like always think that way, and then you're like, this is too complicated, I'm just not going to take a trade, then you're never going to take a trade until that stops, and that could be forever, which I honestly don't think is the worst idea, right? I think the moment we decorrelate, you want to be taking a lot of trades. And until then, it's probably sensible not to. But I mean, at the end of the day, I'm a trader. I try to get at least some action when I see the possibility for positive
And if it
outcomes.
goes up, where do you manage?
If it goes up, I'll probably look at the weekly time frame. I think the
40
first
something.
area, the first area I'd look at is 42K.
Yeah.
I think that is like the minimum. Like if this plays out bullishly, I think that's the minimum that we're gonna reach. I honestly think I'd probably not do anything until 52. I think 52 is like an area we haven't really tested it too much, and it's close enough to range high that I'd be happy to kind of miss out the last move, like the 52 to 60K move, for the added benefit of, okay, just realizing a massive profit and being out of the, like, this is like a dangerous zone in general, because I think a bunch of people would like to get back out there. But that's kind of like my first area that I could manage, I think, is 42K.
Okay.
Anything before that makes no sense to me.
Nice. Nice little 25-minute coping session about this position. Anything else you want to mention on your mind, on your radar? I know people just really like the live stuff and active ideas and discussing them because it's good from a, I guess, educational point of view.
Yeah.
Is
I
there
mean,
anything else, any other factors, or just ideas
yeah.
floating around in your head?
I mean, what I want to say is, like, there's obviously not 100% chance that this plays out, right? I mean, this is something that people kind of tend to forget. Even like you trade and you met, like you realize, holy shit, like there's a couple of times where I actually lose money on this thing, and it's not very different for me or for other people in my position. Where it's like, yeah, maybe I have like a little bit more of a strike rate than you do, but there's still like there's no guarantee that just because I enter a position, it plays out perfectly. I've had a bunch of failed trades over my career, more than I can count. But what I try to do and how I try to look at the market is just like from an outside perspective, where it's like I don't try to get too entrenched in ideas, where it's like whenever you have narratives take hold, and they're usually like a good trade, right? Like a narrative that comes fresh in, like you have a layer one narrative. How long did that go, right? It took forever to stop that narrative. And people like tend to kind of dismiss new narratives for the like early, and then they kind of start getting on board, and at like when everyone gets on board that narrative, like, and then layer one narrative is like a really good example. It all goes to shit. Right? Luna went to zero, AVAX and Sol pretty much went down, what, like 60, 70, 80%, somewhere around those lines. Because this market is basically like when you have everyone on board on one side, it's small enough market that there's just no buyers left at some point, right? And it's the same with selling, where it's like when all people that want to sell have sold, you obviously get like reversals even in a bear market, right? We had that a bunch of times during 2018 bear market, where people sold support because they were like, this support is gonna break, and it didn't break for a long time. And there was like a bounce that took us from 6K, right, all the way to 12K, basically like 100% bounce. And then the next bounce was 50%, and then the next bounce was almost 50% again. Like this took forever to play out, and people are just like too consumed in okay, um, the narrative is that and that, and I have to follow it, and it's gonna go to this and that price this second, and it's just not how it usually goes.
Yeah.
Yeah.
I mean, even if you correctly understand the narrative, if you mistime it, you can still get screwed, even if the narrative is correct, right? Like if
Yes.
Bitcoin, when Bitcoin fell from 20K to 10K, if at 10K you were like, oh my god, it's all over, we're in a bear market, this stuff was going to go down a lot lower, and you sold that, that was a rough trade, right? You got
Yeah.
carried out. There were like a lot of really heavy what ended up being counter trend bounces along the way, where even if you understood that it was a bear market, if you mistimed when you took action, especially from like a shorting point of view, granted it wasn't like anywhere near as widespread at that point, um,
Yeah.
rough, right? Rough. So it's not just even understanding and integrating the narrative that's important, but if your timing is wrong, um, not very useful or helpful in that regard. Should we move on?
Yep, let's move on.
Seems pretty clear. And, when we do a fundraiser stream next Friday for Don, you'll obviously know why. To be fair, you doxing and posting a picture of yourself, it's kind of like a hedge for this trade. So you can start your OnlyFans career if it blows up and goes terribly wrong, right?
Wow. No, I don't think anyone would subscribe.
You didn't
to
do
that.
anything unintentionally. That's what I mean. So there was clearly a secondary purpose for
I mean, there's
stuff.
a little bit of a secondary purpose, and I mean, we talked about this like briefly, but I think, and I mean, what I'm thinking about basically is kind of like coming more into the forefront and using it for like charity purposes, which is
The
just
Don
much
charity
easier to
of
do.
30K support didn't hold incorporated. No, yeah, of course.
But yeah, my idea is basically just like it's really, really tough to like do charities and stuff with like a doxed character. I mean, I think people trust me at this point, but it's easier when you just kind of put your name out there and your face. So yeah,
And
that's
your holds
basically
if the trade doesn't work.
Yeah, but that's kind of like the idea of it all.
Yeah,
I want to see if I can do something cool with it, but if not, I mean, the good thing is I have a forgettable name and a forgettable face, so I'll be gone in a heartbeat.
I'll never forget you, Stephen. Anyway, news stuff. There's actually plenty going on in crypto land, at least from when we last spoke, because it was like basically a Terra episode, both TERRA, but also TERROR in all regards. But here we are with some mixed news. The first one is about, and why can't I? There we go. FTX US launching zero commission stock trading, and there's no payment for order flow, etc. type of stuff. And I think they're centrally routing the orders via the Nasdaq initially, and then letting know what they're going to do liquidity wise. Obviously, we're sponsored by FTX, so we obviously have a conflict of interest. We're sellout shills now incapable of independent thought whatsoever, right? So I guess usual disclaimers out of the way. But I'm not really sure. I mean, look, I can see the larger play that FTX is making as it's not just going to be a crypto business, right? They want to do crypto, they want to do stocks, they want to do sports betting, they're investing in NFTs. It's supposed to just be this like, digital hub of everything, and crypto is a kind of means to an end for that. But for me, at least, in the very short term, I want to see the kind of retail stock trading bubble unwind further. And I really feel like all this kind of meme stock investing, retail investing, options, payment for order flow, Citadel, suppression, the big hedge funds, that entire just like narrative arc. I think it just takes a bit longer to unwind than what we've seen so far. And I think it'll take retail maybe longer to come back to gambling on options and speculating and meme stocks and just that whole kind of like basically what happened in traditional markets feels like to some extent we went through in 2017 with crypto, right? Whereas like every single person, experienced or not, insane market, very easy access to these instruments they don't understand. And then the world snaps back to reality, and you lose all hope. You get carried out, and there's a long, longer than you'd like reckoning period and period of consolidation, whatever else. And this, to some extent, feels like a late play on that. And I'm not just speculating. The whole idea of not having payment for order flow for most of these people doesn't even make much sense to argue against, because if you're aiming for the moon and for like mega trends on the daily, weekly, monthly horizon, then whatever the $200 you pay in a premium, whatever, for an option, that order flow shouldn't materially affect your idea if you think it's going to 10x and blow up every single hedge fund in the world, right?
Yeah.
So having your order flow routed elsewhere or someone seeing it preferentially, if your trade idea is correct, you're not fighting for ticks, are you? You're fighting for the hedge funds to blow up and for this stuff to go to infinity. So to me, it always seemed like a bit of a false idol, or not even a false idol, maybe a false enemy more than anything, to be hyper focused on these market makers, liquidity providers, or whatever else. It just didn't make much sense to me. And so anyway, circling back to the original point, this kind of zero commission stock trading, no payment for order flow, that type of stuff. I know this stuff takes ages from a regulatory point of view, but it just feels a bit late. And it feels like a lot of the narratives and macro stuff has moved on, and it's going to take longer for retail to come back and give a shit and have the money to even give a shit about gambling on this type of stuff and return to the markets in the same fever and fervor that they did in the past year or so. I don't know what you think about any of that.
Yeah, I kind of agree. This is like a really excellent bearish point, I think, where it's like, I don't think anyone really in our circles knows anyone that isn't like at least a little bit in like the market. Like I've talked with, and I mean, I travel quite a bit and talk with like all people. Like I've talked with people that basically live in vans and have a stock portfolio and are invested in GME, and like it's just like everyone has been gambling the last year, right? And it started to cool down, like you said, and I think it's going to take a long while to actually fully unwind. And I think, yeah, like you said, it's weird timing. I don't think it's by choice. They probably would have launched it like 2 years ago if they could have, or like a year ago. But it's like, I think that retail bubble, that entire like meme thing, um, is hopefully like over. It kind of get crazy. Like if this isn't the end of it, right? Where does it go? Because yeah, it's already went, like GME, for example, went from like $2 or something, or $3 all the way to 400 or 500. I
Yes.
still can't believe that people thought like they were getting screwed over because it didn't went to like a million. It's just kind of mad to
I
me.
mean, 90 is still a bit high, isn't it, where it's currently trading?
Yeah, it feels really high, and this is something that I've looked at for the traditional markets, where when it starts picking up again, it's usually closer like to the tops of like the recent, like the bounce or whatever we had. Like every time GME starts ticking up again, or any of the meme stocks starts ticking up again, it's basically because a bunch of apes, retail apes, just saw the stock market be up and are
It's
like,
like
holy
our
shit.
version of DeFi bouncing, or like,
Exactly.
Zcash bouncing, or whatever else.
Yeah, I think that's actually a very good comparison to
Yeah.
make, and it's like, I think that has to unwind, and it will take a long time. I mean, we've seen it in crypto. It's actually really interesting because these meme stocks trade like crypto one to one, right?
Mm.
You look at XRP, for example, how it unwound after the 17-18 bubble. It took forever, right? And then it had like a secondary bubble at some point, and then just walked down again. And I mean, we've seen that a million times in the altcoin world. I think it's going to be the same for these meme stocks. And I don't know what prices would have to do to kind of shake out like this newfound retail interest. That is very weird to me. Whereas like everyone is invested, everyone is trading. But I think it has to happen at some point. Like this is like the best bear argument that I can find in general for markets, is where it's like, okay, almost everyone just kind of yeeted all their money into the market, be it in GME or be it in like the S&P index, just because it all only goes to the moon,
It's
right?
like,
Like
where are the
everything.
marginal buyers at that point, right? It's like, if everyone's
Yeah,
deployed, who's left, type of thing.
yeah, that's kind of like a really good bear argument, I think. But it's not necessarily like, just because you have like a bunch of people in the market doesn't mean it has to be the top, right?
Yes.
But I think it's like one of the better arguments to make.
Speaking of bear arguments, and also gonna have to go open my door in a second, so you might need to freebase this for like a minute.
Hmm.
But for some reason, boomers in the traditional world have arbitrary metrics for when assets enter a bear market. I'm sure you've seen floating around on Twitter
Oh,
today. It's like the
such a
S&P.
meme.
It's like when the indices go down over 20%, that's like officially a bear market, whatever that means. In crypto, we call that a Wednesday. But if you want to make a big deal out of it, that's fine. Two
Yeah,
things to note on that. First is, man, you need better systems than that, right? Like if you're a
yeah,
trader, you need to have. I think it's helpful at least to have some form of heuristic to tell you what the larger underlying trend is. And it could be as simple as like a moving average thing, a price band, even some on-chain stuff, which is kind of trend following, usually spits out similar stuff. Something like that I think is useful. And it falls into one of two camps, right? If it's like a lower time frame, more aggressive, more recent type of thing, faster moving, it'll give you more signals, but also like a higher fake out rate. So as long as you're comfortable kind of de-risking and putting risk back on a slightly more frequent basis, that's one way of doing it. The other one is to take the slower moving stuff, like let's say the 21 weekly, or those slower moving trend metrics, where they're not going to give you the top, right? They might actually flip 10, 20, 30% after the actual tops come in, but you know that their signal to noise ratio, is much improved and those signals are worth taking seriously, right? And then
Yeah.
you can adjust your portfolio or do whatever else based on that. But I think waiting for like either really arbitrary stuff, just like a random percentage move, or very, very, very slow stuff like, Death Cross or something like that, I don't think it's good enough. What do you think
Yeah.
about the whole? You can screen share for this as well,
Yeah.
for the
I
S
was
and
just
P,
about to.
but just in general, kind of higher time frame trend proxies or measurements for this type of stuff. And you can also just meme about the 20% rule if you want. I guess if I had to steelman the other side of the argument, it would be that even though Bitcoin death crosses have historically been quite late, there is, and usually get like some sort of oversold bounce that comes as a result. And I mean like the 5200 on the daily, for example, right? Like it happens
Mhm.
late, but it has, I think if you take the average returns, they're not amazing, but depending on the type of cycle you get, it at least puts your mind in the correct framework of there may be more downside continuation. I know you're
Yeah.
not a massive. I mean, you've like I just looking at the top left of your trading view. There's no indicator stuff or anything like that there. How do you think about higher time frame trend and 20% rule and all the stuff I just blabbed on about?
Yeah, so like the 20% rule, completely fucking stupid. Because the thing is, right, and I've read like the Twitter post of some guy saying like the S&P has like a bear market roughly every 4 years. And then I look at the price of this thing, right? And it's like this is like down like almost 20% or something, whatever, right? This is down 20%, and then it enters the bear market, and the moment it enters the bear market, it reverses, right? Like, what does that help you, right? If the S&P enters a bear market, every time it's down 20%, like if you started selling at that point, it'd be completely useless to you, right? Because every single time, straight after that dump that takes you 20%, it just shoots up, reverses that entire dump. So, like, I mean, for me, if you enter a bear market, right, it's a time where you don't necessarily want to be buying. It's like you counter trend trading the trend, right? And this is like if this is bear market, you basically counter traded the trend, um, but you made a shitload of money on it. And this is like the same thing every single time, right? Every time this goes down, besides like the big moves to the downside that we've had over the years, 2008 being an example, right, where you have like this beginning of the bear market, and then it actually does something bear market like, which is basically cut the entire thing in half. Or back in 2000, where it had like beginning of the bear market and then it started crashing, right? But like this arbitrary 20% rule hasn't really made you any money along the way, besides like a few outliers, which are better like looked at just if you just look at it from like a market
It's just
market
funny,
structure
like
point
thinking
of
about
view.
it structurally. It's like the market goes down for like 15 straight red weeks in a row. There's war, there's inflation, there's Fed tightening. You ignore all of that, right? You don't give a
Yeah.
single shit about any of that. And then it arbitrarily crosses 20%, and then the light bulb flickers in your mind, like, oh, maybe I should take this seriously. Wait, is the bull market over? I didn't even notice.
Yeah,
It's just like seeing some sort of hurricane flying towards your house, and it's just obliterated your neighbor's house completely, and he's like sucked up in it, being spun around like he's stuck in the washing machine. And then finally, you get the hurricane warning on your phone, and you're like, "Oh shit, I should react."
I should start like yeah. It's stupid. And like if you look at these from like a market structure point of view, you could make a much better argument, right? You can just be like, okay, you just broke market structure here, and this is 2008, um, and you didn't manage to kind of reclaim it. At that point, it just kind of looks shit, right? And like these are the points where you can kind of look at it and be like, okay, whether this is a bear market or not, I can de-risk. And like there's probably gonna be times if you backtrack this where it's not gonna work, right? You're gonna have like trades where it does something like this. And I'm sure there's plenty on this on the chart where it then actually starts going up. But that's like the good part about like these kind of trades where you're just able to say, okay, I'm just invalidated, I'm wrong here. This is back to the usual up only, right? And we've had the same thing in here as well, and we talked about it on the newsletter and on the show, where you had like a breakdown happen, and then you rally back into that resistance, and it's really, really cheap to be bearish here, right? Because
Called
you
it,
only
bro.
need,
Fucking called it, right?
yeah, I mean, this is like one that we like to just immediately call, because like the thing is, like, this is just 5% from the all-time high, right? It's really, really cheap to be like, okay, I'm gonna be bearish here, and then just get back if we get anywhere close to the all-time high, and then avoid this entire disaster of like a 20% drawdown. That makes people in the traditional world just completely freak out. If you're in crypto, it's like, okay, whatever. Um, but yeah, that's kind of like a better way to look at it from my perspective, rather than just be like, okay, 20% down, we're in a bear market. And then you get like all the media talking about, okay, bear market, what does it mean? And it's such a stupid thing, right? It's so arbitrary. So yeah, I think it's stupid. I think it's a stupid way to quantify this kind of stuff. Um,
Yeah,
but
I agree.
yeah,
You can build much better systems than that with like just an evening of experimentation with moving averages or whatever else, right? It's not particularly
yeah,
tricky, and it would do better than some arbitrary thing. I've actually got a tweet which has that pretty much that exact level, and it was even the 0.618 meme retrace type of thing of the leg up, down, and then where that retest ended up happening. You know, as far as identifying lower highs, that's one we talked about quite a lot. So if we could have the audacity to look on, let's say, either the monthly or the weekly, we shilled this breakdown pretty much before the last monthly closed, both on the S&P and Qs. It kind of just looked like, man, this is going from sideways to down, essentially, right?
yeah,
And also, we talked about the market structure retest. So as much as we don't trade this market, I think in general, like higher time frame market structure is a decent guide for any liquid instrument, because the market is nothing more than positions fundamentally, right? And then it takes a lot of money to move around high time frame market structure. So it won't be perfect. Maybe you won't have like a one-to-one trading strategy that you do in your main markets, but it's not the worst way to look at something like this, right? If we didn't have this degree of uncertainty, or European imposter syndrome, humility, whatever, we'd be like, yeah, fucking called it, nailed equities and nailed crypto, that type of stuff. But like fundamentally, it's not something we trade. It's just like humble opinion that some market structure line make boing stuff works in indices somewhat well, right?
yeah. The high time frame stuff.
High time frame stuff. So if we build on that, and when you're looking at S&P or Nasdaq, has anything changed in terms of where you might look for a more meaningful bounce? So on the quarterly chart of the S&P, it kind of takes you back to kind of pre-COVID crash breakout level at 3,300 or thereabouts on the
Hmm.
3-month chart, and that's a nice kind of monthly, I guess, support resistance type of cluster as well. The earliest structure that comes to mind is the monthly January 2021 cluster at around 3760 to whatever. Where's the bottom side of that?
Yeah, that's what I
3700.
have.
Yeah, that's kind of the nearest one. And I guess similar in the NASDAQ would be, well, I've got it here, the monthly, we're arguably within the monthly range already as far as support goes, with the top bit being 12.1, the upper boundary, and then 11.1 being the lower boundary. It's a similar type of consolidation structure. And then borrowing from the S&P, the COVID structure, if that's going to be support, that's way down at 7/8, 8/7s, depending on where you look, how you draw it. Do you care about? I mean, first of all, do you agree kind of in terms of levels? Second of all,
Yeah.
do you care about this at all? I know we wrote in Technical Roundup that punting crypto risk might not be the worst idea if you think equities are like closer to a floor than not. Do you still stand by that? Do you have any levels that you care about? What are you thinking about this whole thing?
Yeah, I stand by that. I think it makes a lot of sense, especially when it's discorrelated, and especially when sentiment is bad, right? So, like right now, for example, we're like a little bit away from support on the S&P, right? There's still a little bit to go. If we hit that, right, that support at like 3.7K, or like on Nasdaq, we are, like you said, we are already in support, but it's like a little bit more of a wide range. Um, I think at that point you have like a little bit of tailwind, right? So you have like the tailwind of, okay, there's a there's a bigger chance that the S&P bounces than usual, right? This can bounce at any point. It's just there's going to be a bigger and higher chance that it bounces from support levels, just because people look at it and they're going to bid there with you, right? And what that means for crypto is that one, like people are like, oh, this is correlated, so it bounces, and kind of like goes into crypto as well, that kind of bounce. But also, like whenever we have like bigger bounces, usually risk assets like crypto, at least in my mind, crypto is like a risk asset. Um, you get like bigger bounces, right? So what you can do is you can kind of trade the S&P at this point, um, and bid crypto at S&P support or Nasdaq support, and then kind of go from there, because you have like the added bonus that if the correlation actually starts breaking down a little, you have like a little bit more upside to be had. Obviously, it can go the other way around as well, where it's like, okay, the S&P bounces and crypto doesn't. But I don't think we're at that point anymore. Like we had like a bunch of crypto weakness after 60K that wasn't necessarily mirrored too bigly in the traditional markets. I don't see that anymore. So I think if anything, if the correlation breaks, or like if the correlation breaks, it's probably gonna be to the upside for crypto rather than to the downside, because it's obviously can break both ways, right?
Yeah, yeah. Good. And I think we talked enough about like what correlation breaking actually looks like. Crypto could bottom first and, be faster out the gates. There's a bunch of different versions of it, more so than kind of straightforward directional stuff.
Yeah.
So yeah, TLDR. Keep an eye on your high time frame indices technicals, because they're probably not complete dog shit if the top is anything to go by, where it was fairly reasonable in terms of how levels acted. Other news stuff. Let me make sure I'm clicking on content on my personal tab. Wink, wink. We can actually speed through a fair of these, because I'm cognizant that we don't have a ton of, we want to give people their full Fridays to enjoy, unless they're listening to this on replay as they're hungover on Saturday, in which case, hello. Hope your evening was fun and safe and all that type of stuff. Just as I'm opening up all these tabs, we can kind of lightning round these if you want. But actually, we won't, because we're terrible and both talk too much, especially me. We'll do our best. First one.
I've talked like 50%. I've talked like 50% more than you
Yeah, I mean,
have
you're in a
this episode.
generational trade. If it goes wrong, you will literally never recover ever, because that's how
Oh,
risk
yeah.
management works, right? So,
My entire family's fortune is
and that means
on.
my entire family,
Oh.
by extension, yeah. So as far as that, it's always nice to talk about stuff where you've got like conviction and live trades. So I think people will appreciate. It's
true.
easier than replying the same thing to 50 people on Twitter, right?
That's true.
I'm gonna make the title of this something egregious, like DonAlt's big long idea,
Oh God!
and then in
end
brackets,
me.
is it all going wrong? Type thing. DonAlt's big long gone wrong. How about that?
Oh, I like it. I like it.
I've got the first article here, most of it from the block. We like the block. It's not Block Works, which is a bit of a journalistic rag. Heard they host good conferences, but good Christ, their Twitter account is awful. Is the 24/7 crypto market good or bad for traders? Experts disagree. I generally think it's good. I think global markets are kind of slowly moving towards that as well. Pre-market and post-market trading hours, having that cut off to not everyone is shitty and probably hampers price discovery over time. And you can always just like not trade and not take positions with you overnight if you don't want to trade. And it also gives you more days in the week to develop good trading strategies. I just think overall I'd rather have more than less. Anything that's not a form of gatekeeping and gives more opportunities for price discovery, I'm generally going to be for. And then if you don't want that, then don't put risk on. That maybe it's a bit of a brutal or barbaric view, but makes sense to me. What do you think?
I mean, does it make you want to trade too much? And does it push you in like okay, I need to be online 24/7?
But that's like a you problem, right? Like, I don't want to
Yeah.
take that away from the market if I know that people are going to be undisciplined or whatever, it's like, do we then close down leverage and that kind of stuff? So
I mean, that was what I was about to get to, which is basically like, yeah, it is kind of shitty. That is something like you have to kind of be able to turn that off, right? But it's a you problem, like you said. It's something that you don't need to be protected off. I think it's just something like it's more efficient, and we need them. Like every market is just going to get more and more efficient, I think, over time. So it's just something that just makes sense. But obviously it comes with its own problems, and it's something that you have to fix, right? You have to take a day off, or you have to take the weekend off. I mean, in crypto lately, it's been pretty much a snooze fest on weekends, right? Back in the day, we got like 10% moves up, 10% moves down, while like the traditional markets were like closed. Nowadays, it's just like it's nothing happens anyway, so might as well take off the weekend. And that's like something in general, I think that you need to figure out as like if you're a full-time trader, because or like a full-time investor or whatever, you have to put this aside. You cannot like this is a problem that I've seen in crypto all the time. People cannot kind of tune out and ignore the market. And what that leads to is burnout and in general frustration and unhappiness. And if you come from like a place of unhappiness and frustration, you're going to make stupid decisions, and it's just not going to be healthy, right? So you have to kind of work on that.
Okay, you fucking hippie, stop staring into my soul. I'm trying to make some money. Jesus Christ. What are you? No, my priest or my yoga teacher?
Maybe both. I've taken some advice from my yoga teacher. No, but it's like literally
about investing, which is why you're in this long.
Oh, low blow. No, but it's really true. You need to kind of come at it from like a good place. If you want to perform in any kind of high performance sport, you have to be healthy. You have to eat good. You have to sleep well, and it's the same with trading, right? If you don't do any of it, you're gonna go broke eventually, because if you're just unhealthy and just kind of come from a dark place, it's just not going to be good for you.
Well said. Part of this article is quite funny because it has a quote saying, "Crypto trades 24/7. This is not necessarily a good thing, and we may soon find out why." And that's it. That's the end of the quote by Ben McKenzie, an actor best known for his role in crime drama Gotham, who is now working on a book about crypto and fraud.
What?
Yeah, he's become. Thing is, I saw people engaging with him about crypto, and just as a kind of aside, I think it's completely valid to criticize crypto. It's very easy to criticize crypto. There is an endless, infinite, and ever-growing amount of scams, fraud, grifters, bad faith actors, people scamming the vulnerable. You know, there's a lot of shit in this industry, right? The difference is we're like making the conscious decision to make an effort to not even make it better, just to fucking navigate through it and try to extract edge, alpha, whatever else, and maybe in the process help some people as well, right? Through this podcast, through other stuff, etc. But I think in general, if you're someone who hates crypto and you dedicate like a large part of your existence towards being very vocal about that, under the guise of like protecting people or doing whatever else, it's just kind of sad. Because first of all, it's the whole idea of protecting others by being hateful about something. And I don't mean hateful even as a value judgment. I just mean coming at it from like a negative point of view. That doesn't really change anyone's mind, right? And most of the time, those same people, they'll find a way to lose their money somewhere else. Like if they're going to fall for the really shitty, low-tier crypto scams, they'll either only learn if they lose their money, and even if that's not the case, they'll probably go and seek out, be attracted to similar opportunities in another form or later down the line or from someone else, right? Unfortunately, that's my belief at least. And therefore, if you're the type of person who's going to dedicate like a disproportionate amount of your time, life, effort, credibility, whatever, towards just hounding something which you fundamentally don't like, that's fucking sad, man. That's a very sad form of existence. And again, that's not to say you can't criticize the industry. You can and you should, especially as someone who participates in it. And that's certainly what we try to do a fair bit as far as from a trading point of view and talking about narratives being exhausted and none of this shit being real and overvalued and so on and so forth. But like, it always rubs me the wrong way when people with no skin in the game, no expertise and kind of just no vision to offer, be it from the inside or even any alternatives, just like nothing. And it's just, and they build their entire personality, and it's a very self-indulgent process of making their entire persona being anti-crypto, because I don't think it fundamentally helps that many people, and it's just kind of a mechanism for engagement. And the worst part is I actually really liked Gotham. So yeah, I don't know, that's a bit of a rant there, but it's just such a fucking waste of time. Even if you look at like the quote unquote best actors, like even Zach will tell you in a thread, and he's been lauded as kind of Twitter police and on-chain sleuth, whatever. And he's done a lot of good kind of explaining to people with really good evidence of how a lot of these pump and dumps work and rugs and mints, whatever else. If you talk to him about like how much of a difference you think you're making, he'll be the first to tell you that it's like negligible, right? And this is like some of the highest profile, most transparent, pin to the wall type of stuff. He's like, oh, what the fuck am I doing? People are just falling for it anyway. I'm not having that much of an impact. So if he's not doing shit, what kind of impact is Mr. McKenzie going to have by just joining a group of angry people saying that crypto is fraudulent? I don't know. That was really ranty and substanceless, but it's just...
No, I agree.
I just hate how we've made it a full-time job to be like angry at crypto or like anti-crypto. It's just such a waste of everyone's fucking time. I can't relate to it.
Yeah, it's just, I don't know why, but some people just, I mean, and this is like not only crypto, it's just something for pretty much everything that people like, right? Where it's just like some people hate it and they really try to make it, or like in general, make it into their personality, right? It's weird. It's just like in general weird. And the worst part about all these crypto haters, just like crypto specific at this point, is that they always pick the most stupid shit to be angry about, right? There's so much stuff, so much stuff that you can shit talk. Like, I mean, we just had a Luna UST blow up, right?
Yes.
It's like, it's such an easy way to kind of have like valid criticism about this industry. And then they pull up the most stupid garbage every single time. And it's like, it's so disappointing because at the end of the day, what they're doing is like, they're highlighting the stuff, like they're trying to highlight how shitty crypto is. And then the mainstream narrative kind of attaches to it. We had like a bunch of NFT hates because of like climate change, for example. But there's like so much more. Like if you wanted to shit talk crypto, there's valid reasons, and you don't have to kind of go for like stuff that isn't valid.
You don't have to look far either, you know? Like,
yeah, it's like,
come on. I replied this to Jemima Kelly of the Financial Times because I think the FT, while a good publication in general, I haven't been impressed by its crypto coverage, and this is someone who's you know my cynicism towards crypto and the people in it, right? It's I'm no evangelist, to say the least. And she wrote an article titled "There's a Moral Case Against Crypto," and it just presents some really bad arguments about like a not so persuasive Bitcoin environment study, and then it's people losing their money and whatever else. And I just replied saying there are lots of well-supported and compelling critiques one can make of this industry, which is filled with fraud, theft, and grift. Astonishingly, this article sidesteps all of them. Like we need good critics, and it's so easy to even be a mediocre critic. But you're right; they focus on really weird shit and make it tangential and unpersuasive. And that's the thing. If you criticize, like if there's something you don't like, and you've got a lot of opportunities to criticize it with stuff that's compelling, and then you pick stuff that's not compelling, it makes those same people you don't like, you're making their lives very easy because they can refute stuff that's not very high up on the tree of hierarchy of importance. Like you want to make life hard for them, for people you don't like in that regard, by going for the largest effect size or most compelling criticism, the one which that even internally they're not comfortable about. If you keep giving them softballs, they're going to keep hitting home runs, and then the whole body of crypto criticism becomes uncompelling. And obviously all these fucking actors. How can you ruin Gotham for me, man? I'm not going to forgive that. But like, of course, all these articles and all these people come out like when the markets are nuking. It's just extra funny now that it comes out when markets are nuking. Yes, but so is everything else. That crypto is this like specific Ponzi. It's like, oh, well, if only you had your money in like an ISA or something. It's like, I don't know, the indices are getting hammered as well. Oh, and there's a lot of inflation and gas is expensive. It's like, there are no winners here, Like, there are bigger losers in some areas than elsewhere. But, at a certain point, Bitcoin and even NASDAQ were like equal performance year to date or some crazy statistic like that, right? Yeah. Anyway, be better fucking critics is the point here. And don't ruin Gotham any further.
I mean, Netflix down like a shitcoin would be. So it's like it's really rich.
All these SPAC and IPO stuff as well, like the Robloxes and it's dog shit. Do Kwon amends Terra 2.0 proposal during the vote on it. I've got a very I did say lightning round, so I'm going to speed through this. I think most of the people who got wrecked on the TFL ecosystem and are expecting some sort of like miracle story to come out of it, probably very wrong and will be disappointed, especially given the state of the market right now. I could see a world in which if it were like peak bull market or like 3/4 bull market, those big name backers get blown up, but they've just got so much money and such a incentive to defend their reputations, that they would just kind of bail it out and throw money in it and it wouldn't matter. And there is like a credible external cash injection that maybe breathes some life into it, and the rest is just like the bull market carrying the resurrection, if you will. Maybe if circumstances were materially different, there'd be a compelling comeback story, or at least a road to it. But I think Wassy Lawyer, who's a friend of ours, said it really well. Most people want a time machine more than anything. Like the stuff they're reading on the governance forums, all these proposals, looking at Do Kwon, looking at LFG, or what about the big investors? What actually happened to the Bitcoin, all of that. People want a time machine. This ecosystem got blown the fuck up. A lot of people were hurt. It sucks, but I don't think it's going to go back to what it was. But I do think, on that note, if you're not getting your time machine, I do think Do Kwon needs to fuck off. Like at this point, if this thing is going to, be builder centric and try to restore or keep some of its builder ecosystem, which generally I think is unlikely because now there's no money and the market sucks. So you're probably going to go somewhere where you can at least eat, right? But in general, if there's a path forward, I think it has to be without this fucking narcissist. What do you think?
Yeah, I mean, you saw the Twitter conversation I had with him. So yeah, I tend to agree. In general, I think, he's done so much reputational damage, because the thing is, like, if you like public facing and you like pretend, or you are like the biggest cool guy and you're just like this badass basically, you're at risk as well, right? If something goes wrong when you put yourself in that kind of position where it's just like you pretend to have it all managed and have it all under control and all that kind of stuff, then when it goes out of control, you're obviously the punching bag, right? And at that point, I don't think anyone really feels bad about punching, because you put yourself like over everyone else. And I mean, he did this very famously with like, your size is not size and you guys like have no money, blah, 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 blah. Right. So he kind of put everyone else down by like saying, I'm the greatest. And now that he like fell from grace, obviously all those people that he punched down on, right? Because that's essentially what he did, just kind of like belittle everyone that was smaller than him. And at that point, like, he was like a really, really big guy, for better or worse. And now it's the reverse, right? He like took a massive hit and he's down in the dumps. And I don't think if you kind of acted the way he did, I don't think you really deserve a second chance, even more so given he already had like second chances and he kind of screwed it up. And there's just some stuff that you don't come back from, right? And this is one of them, where it's like a bunch of people all across the world just lost their entire savings, especially like the UST stuff. Like Luna going to zero is one thing, right? But the stablecoin going to zero basically,
because it's supposed to be like
another.
A savings account, right? That's the most egregious part. Not to rehash it. That's what people thought. They're like, oh, inflation's high. This is a nice, safe thing. And
I mean, that's what they're told as well. Like that's what like the Luna people told them, and makes it a lot different, right? Because people are like, stablecoin, one US dollar. Like, people don't really understand how it works with like the uncollateralized versus collateralized stuff. They just like, a stablecoin, I get like $1 for this, and obviously wrong. And I think he needs to fuck off, like you said.
Right. Bit of a weird story, but it's just so dystopian and strange. It made me laugh. Also, I'm not misreading this. It is how it sounds. Chicago to let vaccinated teens mint NFTs of themselves as part of COVID-19 prevention effort.
Oh, God.
According to Chicago government release, the effort is meant to reward young people who have vaccinated themselves against COVID-19. Teens can have their portrait minted onto a one-of-one NFT to keep or to later resell on a secondary marketplace. My question is,
what?
I've got a two-part question. Who the fuck is buying one-of-one NFTs of vaccinated teenagers? And the second part of that question is, why aren't they on a list already? Like, this is just such a weird thing.
Yeah, I mean,
There's no more context. If you're wondering if I've like misunderstood something or there's some extra context to the story, there really isn't. The NFT multimedia platform will give NFTs to the teens who choose to participate. I
this is
guess
so
it says each
stupid.
NFT includes an excerpt from work from the Chicago-based musician Keith Harris, and then you have an NFT portrait of your vaccinated self, and you can either keep it or sell it on OpenSea. And there's like an institutional bid on vaccinated Chicago teenagers. What the fuck is going on, man? Because you have to
I
realize
mean,
there's some consultant who like was paid to go talk to the government officials about like vaccine uptake, and this is what they came up with. And it went through several layers of review, and not there wasn't a single person in that fucking room in all of those meetings who just sat down and said, "Guys, this is retarded. This is the worst fucking thing I've ever heard."
yeah.
It's so
I mean,
surreal. This is like
I
The
don't even
Onion.
know what
This
to
must
say.
be like satire, right?
I mean, that's honestly nowadays it's so tough to tell, right? Like The Onion, like if you go through The Onion and you go through like real news articles, you can't tell the difference anymore. People have lost the plot, like legitimately just lost the plot. And I mean, what?
So are you saying you're not buying any of you're not bid
No.
any of these NFTs?
No, I don't. I wouldn't even make a joke about buying them because then I'd end up on the list, I think.
It's true.
It's like-
It's true. So there you go. Speaking of NFTs, OpenSea disables Bored Ape NFT amid legal case in Singapore. So the High Court blocked the sale of a Bored Ape NFT due to a loan disagreement, and then disabled trading for the specific item on its platform, which is super interesting. So I guess the only thing here is the only angle that I find remotely interesting is it says, according to the law firm, both parties entered into an NFT loan agreement on March 19th with a subsequent refinancing deal a month later. This transaction was carried out on NFT Fi, an NFT lending platform. Obviously, the plaintiff was unable to pay back the loan at the due date, but still had the option to extend, yada yada, all that type of stuff, like normal reneging on a loan type of thing. At least you get, there's some argument to be made if you want to be very charitable that there appear to be some property rights over NFTs that courts are willing to recognize. Maybe in this case, it's not nothing to do with the NFT itself. It's the fact that there's an existing loan agreement on the platform. But at least it's maybe a valid form of collateral. So it's not like total dog shit whereby it's like, oh, you've just got like a picture of something and it's code on the internet. Like if you right click save that ape, you wouldn't be able to go to the guy who gave you the loan and say, hey, can I get my principal back or whatever else, right? Or can I get my ape back or whatever? So maybe there's something here as far as NFTs not being just code that maybe is hosted on a website and maybe has a picture. If it starts being used as collateral or recognized in legal agreements and these platforms seemingly kind of transfer over to the real world, that's okay, right?
That's the positive angle, and the negative one is where's the decentralization in? Like how can you block like a sale of something like that? Like it doesn't really make much sense to me.
Just like it's a court telling OpenSea, I think, is so.
Yeah,
They really want to comply, right? They want to be the compliant NFT platform. So if they're going to get a fucking court order from Singapore, they're probably going to adhere to it because it's just like a centralized exchange, right? Like I know people don't think about it that way, but it's probably how you should think of it.
Of course, but it's like the entire point of crypto, right? In my eyes, anyway, is that it's decentralized. That like you like have this kind of platform or like this blockchain where you can just transact, where no one can just kind of block whatever you're doing. Because otherwise you could just do like the traditional way, because crypto is so much more inefficient, right? Over like the traditional way of doing things. You could make the traditional market so much more efficient than you could ever make a blockchain efficient, just based on the fact how it works, right? All the security measures have to be like, it's really tough to keep something decentralized, like secure, right? And then like if you kind of have this, okay, you can block transactions. I mean, this is obviously not on the blockchain layer. This is just OpenSea, but still, right? You get what I'm saying. When you can kind of like the one place where you can trade NFTs, when that can just say, okay, no, you can't sell this one or that one. And I've had this problem with hacked ones before, right? When you like people get like quote unquote hacked, and then the sale of that A gets blocked or
Oh god,
whatever.
yeah.
And I really don't like that. I don't think it makes much sense, because at that point you can just go and just trade like stocks or whatever, or trade something in traditional
I mean,
world.
look, we both know this article isn't terribly interesting, but the main reason I put it in is that it's a Bored Ape story that doesn't involve theft, right? So,
I mean, some sort of
some sort of theft.
I mean, it definitely is like some
It's a
sort.
better form of theft, I guess. So
I
it's an
guess,
improvement
yeah.
of some sort. Polymarket appoints former CFTC chair Giancarlo as chair of advisory board. Sorry, CFTC chief Giancarlo as chair of advisory board. This goes back, and this is a proper lightning one, to something we said. Like, if you want to get into crypto and have like a really good, comfy job, actually start from the traditional side of things in like the government or a regulatory position or like a digital law enforcement, whatever. And then, by virtue of that revolving door of mega rich firms having infinite money to curry favors with lobbyists, regulators, whatever else, like, you know, back in the day, all the ICO projects would take these washed up SEC lawyers and former executives from like shitty branches and people, you know, states no one's ever heard of or could point to on a map, and made them advisors. That's probably more money they made in one ICO season than their entire SEC career at that point.
Yeah.
But this is like a real, not, you know, all cynicism aside, this is like a very legit way to make it in the industry if you want to do it like seriously and not just like gambling or whatever else. Yes, you could start and try to become crypto native with like coding, trading, investing, participating in a DAO, you know, being in a community, whatever that means. All that type of stuff is great. But if you want to take a more conservative side, or if you're already working in those other industries, if you can get your foot into some sort of, you know, government agency that's crypto adjacent, there's a really good chance, even if you have like some crypto understanding, you become a very, very attractive acquisition for, you know, exchanges, funds, firms, think tanks, whatever else. It's a very understated and legit way to get into crypto, I think, especially if people with like some decent career backing.
I totally agree.
Cool. Coinbase is launching an initiative to slash spending and grow revenue. I mean, have you seen the Coinbase stock? That's turbo.
Bad.
That's down turbo. It's also Coinbase bonds were getting like routed as well. It's pretty rough. It's almost like the market. I mean, it understands.
Almost like we're in the bear market.
It's almost like we're in a bear market. The thing is, like, Coinbase is like a very cyclical business, right?
Yeah.
A lot of its revenue is obviously going to be a function of volumes by virtue of being an exchange and just crypto market cycles in general, like users, wallets, fees. You know, there's been a lot of competition as well more recently. I mean, especially with FTX. But again, you know, we're sponsored, so nothing we say is serious, and we are shills incapable of forming independent thoughts and whatnot. But this, like, I think it's reasonable to argue that whenever the next market cycle comes, I think the stock is probably going to do well, right? I expect it to be some, you know, to have some larger correlation with, I mean, markets in general, like equities in general, are getting slammed, and then if crypto is getting slammed alongside equities, then crypto equities kind of get like doubly fucked, right? Because it's just like everything is screwed, but your crypto is especially screwed, basically, by virtue of being, as I mentioned, a cyclical business. But I think this might be, you know, for boomers who don't like explicit crypto exposure, and GBTC is at like a chronic discount and like a fundamentally broken instrument, and there's, you know, the futures ETF is expensive, and there's no spot ETF, and there's, you know, you've got a bunch of bad choices. I think coin stock, not financial advice, whatever, but, you know, if it gets to a point where you want to start putting blue chip, if you will, crypto exposure on your portfolio, this isn't the worst place to look on like a cycle to cycle basis, especially given how it's performed. What do you think? It's just like reflexive, right? It'll get hammered during the downside, and then when fees are high, revenues are high, and there's a full blown bull cycle, it'll get overpriced on the upside, you know?
Yeah, I mean, that's just generally how crypto works, right? Crypto, everyone wants to own crypto in a bull market, like legitimately everyone, and no one wants to like hold crypto or like have crypto in a bear market, because crypto goes from the future to a scam very, very fast, right? And it's just something that is like very, very crypto native. It's like when it goes up, it's the future, and when it goes down, it's a scam. And that's just how crypto works. That means that during bear markets, stuff like Coinbase is not going to be used at all because people are not going to be trading. That no one wants to own crypto at that point. And this is also why like retail gets hammered in crypto so much. It's because like everyone thinks it's a scam until like their neighbor makes a shitload of money and they're like, oh, maybe I should invest in it too. And at that point, the neighbor's up like 10x, the entire market is up 100x, and they buy
Your
the
neighbor's
top.
like underperforming massively, but you're like, holy shit.
Yeah, and it's like, and at that point, you're just like buying the top basically, and then you get wrecked, and you're like, oh, this is like a scam after all. And people always go through this. Like, this is like the crypto cycle basically, where you kind of go from, okay, this is a scam to, okay, this is not a scam because it's going up. But then it's actually a scam because you just bought like ADA at the top. And it's like, yeah, this is how it works. This is how crypto works. Like the really shitty stuff is going to look the most attractive at the tops to retail. It's basically like a lot of this stuff is also engineered to look good to like
Yes.
to like people that have no idea what they're talking about, right? Like you can make some of the stuff sound so nice and so futuristic that you just like people just want to hold it. And then you ask like a few deeper questions. For example, like you have like all these blockchains that are so fast, and people are like, holy shit, this is like 100 times faster than Bitcoin. It should be worth 100 times more. And it's like, yeah, but why is it so much faster? And then it's obviously because of a trade-off in the decentralization department.
Or the
and
security,
like,
whatever else. Yeah.
exactly. So yeah.
I guess fundamentally, and it's funny because this is like the most anti-fundamental thing. Really, what matters is like you've got liquidity, momentum, reflexivity, and memes, right?
Yep.
That's mostly it. And a lot of the times that's reflected in the tokenomics, right? Like it'll burn. I mean, EIP 1559 is not really an example of this, but like you can see just by the way a lot of these charts look, it's meant to be reflexive, right? Like when it goes up, which is basically a fancy way of saying if it goes up, the fundamentals improve markedly and it keeps going up. And if it goes down, the fundamentals get worse
Yep.
markedly and it keeps going down, right? That's essentially what that means. And then you factor in momentum trading models and liquidity, that's kind of your alt season essentially. So a lot, we should do a separate session, Don, because I sat down and scrolled through the A16Z crypto in a nutshell thing, which has all their Web3 blockchain NFT DAO theses type of thing. Do you know how many? Also, I'm not a maxi by any means, but do you know how many mentions of Bitcoin there are in the whole thing? It's called the State of Crypto. Do you want to guess?
No, 0.
0.
Oh god.
0. 0, 0, 0. So that on its own is risible, right? The pretty much the entire industry is built on the back of Bitcoin to a large extent, and people who even from like a purely trading, I don't give a shit about any of this point of view, you still have to care about Bitcoin whether you like it or not, right?
Yep.
So that to me is absolutely wild. We should let us know in the comments if you want us to do a sit down cynicism session with that document and kind of go through it in a no bullshit way. It might actually be quite fun, but we won't do it now. The final two things I've got is Tether published an attestation. They reduced some commercial paper, more treasury bills. Some people don't like, some of the criticisms I've seen is just like they're lying, and it's like, well, okay, you're not gonna be able to convince those people, right? Because whatever they put out, they're just gonna say they're lying and fine. I just think in general the narrative has shifted so much that Tether's got no reserves, and then its market cap turbo nuke because people are making redemption, and they're saying, oh well, now look, it's a bank run. And it's like, wait, no, the fact that the market cap nuked but the peg stayed means, I mean, they're paying those people something, presumably, right? Dollars if the thing is working. So which one is it? They have no reserves they can pay people, or they're being redeemed. These reserves, which they don't have, are being redeemed so quickly that the whole thing is going to zero. It's like you kind of have to pick. And also, just like in general as a user, it's so easy now to swap between stablecoins, and it's super liquid and easy and cheap. If you don't want to hold Tether, you don't have to, and they've done a decent job holding on to their peg and processing redemptions. And in general, it's pretty easy to swap from one to the other without even interfacing with Tether in the first place. Like, these USDT, USDC pools, whatever else, it takes a click. I don't get why people are so obsessed with this. I wish this narrative would fuck off. It's been 5 years,
Yeah, the funniest thing is like all these Tether truthers, right? Like they watched they watch Luna and UST grow, and it's like this is exactly what they say Tether is, right? And then watch it go. If they watch it implode, no one like I'm betting like none of like the Tether truthers actually took like a short on either of the two. And I mean, if they did, probably got blown out on the way up. But it's like it's so funny because Tether has been around for so long, and like if it was legitimately just like fully fraudulent, right? And I'm not saying there's never been anything shady about Tether
It's
at
the
some
opposite,
point.
right? Like we know they've been dodgy in the past. This is
Yeah,
like a clear matter of record. But you can just make a risk-adjusted bet, right? It's like, should Tether be at $1 or should it be at 0? It's like you don't need to pick there, right? You don't need to pick
yeah.
Tether at all, but maybe you want to price it at 0.98 or something, or at certain points as the market has done. And then all you get is Trabuco replying tweets saying, I never thought I'd get Tether so cheap. It's like, that's who you're selling into every single fucking time, you know?
Yeah, I mean, it's just like it's free money. I wish I was there. Like I would have done that with so much size, just because it's so free. Like it's just legitimately free money every single time when people start selling Tether. And I mean, at some point, it's probably not going to be. If it is actually like just like if the entire industry is fucked. But at that point, like why be in crypto, right? If you think Tether is fraudulent and you think it's gonna go belly up, you might as well just sell everything, walk away,
Yeah.
and then do something else with your life because yeah, it's just you're just wasting your time, I think.
Agreed. I guess the final point is, I don't know if you saw this. CZ basically published a blog about the whole Luna debacle, and
Mm.
it's pretty strongly worded. I'd recommend people read this. You know, he doesn't, as I said, he likes to be neutral as far as these things go, so that he doesn't come across as an arbiter of what projects are good, what projects are bad. But this is pretty scathing. You know, this is a quote: "The most stupid design flaw is thinking that minting more of an asset will increase its total value (in brackets market cap)." And then he says, the other fundamental flaw was the over-aggressive incentives, talking about 20% APY. It's got some healthy lessons here, like, high APYs don't necessarily mean healthy projects. He
Yeah.
talks about trying to restore the peg and how that went terribly wrong. Mentions some spillover effects, the potential regulatory overhang that comes as a result. Some tips at the end, like diversify, stay away from super high APY investments, and kind of educate yourself, that type of stuff. But man, for him to step out both on his like personal account, then via Binance, and he would tweet stuff saying SMH and that it was poorly handled, and then making a blog, like, damn, he's not a happy bunny with any of this. I think
No.
it's because he knows what it means for the industry and from a regulatory scrutiny point of view, like, and giving people ammo, especially to go after stablecoins, which are the most successful thing crypto has come up with.
Yeah.
Which is ironic. And I'm sure people will disagree and say DeFi is more useful or ETH or BTC, and there are reasonable arguments to be made in that regard. But like in terms of, I guess, utility, stablecoins, which is kind of crypto fiat.
Nothing beats stablecoins.
Yeah, crypto fiat, the thing, fiat being that awful thing which gets mega inflated and is terrible money, etc. It's like crypto fiat's at least top three, at the very least top three kind of best innovations
But
or crypto inventions we've come up with.
I would legitimately say top one. It's just like it's the thing that works best in crypto.
He likes the
Now,
coin. Well, you've been selling those things you like for Bitcoin, right? That's kind of the trade you've been making. These amazing top one inventions you have in the market, you've been shoving them in to buy BTC USD.
Yeah, it's complete and utter mental illness on my part. I should be stacking the stable coins because I'm a big believer.
It's like top three: USDC, USDT, and DAI. Next question, or BUSD, I guess.
Yeah.
This is a long episode. Any final stuff you want to touch on? I know we kind of talked about your trade idea a lot, and I think I will make the title DonAlt big long brackets gone wrong question mark.
Yeah,
question mark close bracket. That'll be fun. But yeah,
I mean, I think like in general, like how this is gonna end up, and I hate like both outcomes. Either like I'm gonna be the hero, and there's like people. I hate it whenever I buy the bottom, it goes up, and you're like, people are like, oh wow, it's like whatever, and it's like it's so annoying. It gets like so old real quick. But also like the opposite side of the trade, and I've gotten a bunch of this already today, and I'm not even underwater yet. I got like a bunch of people at me being like, haha, you suck, blah blah blah. I'm like, what the fuck? This is so wild. This is why, like, I think most people don't put out like concrete trade ideas or like big conviction
Or if
anymore.
they do, yeah, exactly. If they do, they'll flood your feed with it for 2-3 months of the same direction.
Yeah.
And at that point, it's not even signal, it's just noise, right? When your signal crosses a certain frequency, it becomes noise at that point. Not going to name any names, but you know.
Yeah. I mean, and especially if you like name invalidation after invalidation keeps going down, and then it's like, yeah, that kind of stuff obviously blows. No, but like in general, like, yeah, it's just like, for me, it's gonna be a weird time the next few weeks, anyways. Because the thing is, like, I have like a trade to take care of, and then I also have like a bunch of people on Twitter jumping down my back. So
I mean, you'll take
yeah.
care of them first and then the trade, right? It's like, as the market's like mooning or nuking, you're there like, wait, babe, I'm not going to like manage this trade. I need to reply to the haters/lovers first. Because that's how we know how that works, right? It's like you will be defined by this one trade that you're taking.
Yes.
After selling the top. But just forget that
Yeah.
context, forget that it's one trade and you know how to manage risk, etc. It's like you as a person, you know, your personhood and validity as a moral agent will be determined by, I guess, the next weekly candles. There'll be a fun follow-up Friday show. We might actually get Avi Feldman on. So I chatted to him this week and said, ask him whether he wants to come back and record with us. He said he did. So maybe we'll save you the embarrassment and talk to him instead. But you'll have to do the Wednesday stream anyway. That's all from me. I'm sure that's plenty of technical roundup for you to listen to, catch up on. So yeah, leave us a like on the video. Thank you to FTX, the mobile app, for supporting us. Download it because it's the best mobile trading app on the market. And support them because they support us. Subscribe to the channel. We now have more subs than the Bitcoin price. You know, if you're gonna decouple, at least moon us. I'll take that. I'm sure Dom doesn't feel the same way about that type of trade.
No,
no decoupling.
Just push up price and unsubscribe. That's fine by me.
Great. Blatant conflict of interest going on here. Have an awesome weekend. That's all from us. Subscribe, like, trletter.com for the newsletter. We'll see you next week. Have an awesome weekend and bye-bye.
Bye-bye.